If you haven't started a Roth IRA yet, it's never too late, but the earlier you start, the better. If you start one early enough, you can almost guarantee that you'll be able to retire a millionaire with as little as $100 a month. In this video, I'm gonna show you what a Roth IRA is, the benefits of starting one ASAP, and I'll walk you through actually starting one with M1 Finance. So if you're ready to take control over your financial future, stay tuned. So what's an IRA? An IRA just stands for Individual Retirement Account. The Roth part means it's tax-free. So you put money into the account, and this money that you put in, you've already paid taxes for. As an employee, your taxes get taken off your weekly paycheck automatically. If you're self-employed or a small business, you would declare your taxes at the end of the year and then pay the government whatever you owe them. So any gains that you get from contributing to a Roth IRA once you retire come out tax-free. Unlike a regular brokerage account or something like that where any gains you make on it, you do have to pay taxes on. But with it comes a couple restrictions that you need to know. Like as of 2020, the maximum amount you can contribute to your Roth IRA is $6,000 a year. Another thing that people might not understand is that the Roth IRA isn't an investment itself. It's an account, kind of like a brokerage account that you use to buy and sell stocks, except it just has all these benefits. You actually have to pick your own investments inside unless you get somebody to manage it for you. But I'm here to show you today why it's actually better for you to manage it yourself. Another cool thing about the IRA is if you need that money before you retire, you can actually take out any of the money that you contributed without paying any penalties. But on the gains that you make from the investments, if you do take out the gains before you retire, and retirement age is anytime after 59 and a half, you will have to pay a 10% penalty and pay taxes on the gains. There are some exceptions where you wouldn't have to pay a penalty on the gains, and those are things like first-time home purchases, college expenses, and also birth or adoption expenses. Now let's hop into my computer real quick and I'll show you exactly why you should start one ASAP and why waiting even 1 year to start one can cost you hundreds of thousands of dollars. So let's say you're starting with $0 and you're putting in $100 a month, and you're 25 years old and you plan to retire at age 65, and we're expecting a rate of about 12% a year from our investments in the IRA. Now I know a lot of people say that example is a little high, but when you're self-directing your IRA, it's actually not that high. Sure, I don't have too much experience, but over the last 5 years, I've been able to do over 40% a year with my portfolio. So 12 doesn't seem that high to me, especially when you're using something like M1 Finance, which unlike other ways to create a Roth IRA, M1 doesn't charge you any fees. But as you can see, even when you're starting a little late at age 25, contributing even just $100 a month, you'll still be able to retire with over $1 million. Now look at the difference in money if you started at 24 instead of 25. If you start at 25 and retire at 65, you'll have $1,030,000 at the end. And if you start at 24, you'll have $1,156,000 at the end. So that's a difference of about $120,000. That's why I tell everybody that you should start as soon as possible. And that's why I actually believe this kind of stuff should be taught in school. Now let's take a look at how much you'd retire with if you start this at 18 years old. So with just $100 a month, if you start at 18 years old, you'd actually retire with almost $2.3 million. Now one question that I seem to be getting a lot is, can you start it if you're under 18? And the question is yes, but not with M1. What you'd have to do is get your parent or guardian to start something called a custodial account with something like Vanguard. They have decent IRA plans, but they have a higher startup investment cost and they have higher fees. Also, they don't have a cool app and their website isn't as friendly to use as M1. But another cool feature of M1 is if you do decide to go with a custodial account and start early, and then you do want to move to M1 so you have the no fees, the cool app, the better technology, and the easier way to self-direct your IRA, M1 makes it really easy to move your whole IRA over when you do turn 18. Now, like I said, the most you can contribute to your IRA in a given year is $6,000. So let's do the math as if you started at 18 and you're contributing $6,000, which is about $500 a month to your IRA. You'd be able to retire with over $10 million. Now, for the people that are saying that 12% is way too high of a return, let's lower it down to 7%, which is below average. If you start at 18 and maximize your contribution, you'll still retire with over $2 million. And if you start a little late at age 25, you'll still have over $1.2 million if you retire. So that's the main reason why I say the earlier you start, the better. So what I'm actually gonna be doing is creating my own Roth IRA in this video, so you can follow along and create your own as well. I'm also gonna be showing you how to pick the investments to go in there. And if you're not sure what to invest in, I will also link to my portfolio so you can see the kind of things I'm putting putting into my IRA. So the reason why I'm gonna use M1 Finance to create a Roth IRA is because it's got a ton of pros. It's super intuitive and user-friendly. There's 0 fees. Got a great app to go with it. You can literally start your retirement right from the comfort of your toilet if you wanted to. They have fractional shares, which means you don't need to buy a full share of a company to be able to invest in them. So something like Tesla that is about $500 a share right now, even if you invest only $100, you can buy a fractional share of Tesla. Instead of other companies where they wouldn't be able to buy a share of that unless you have enough money to pay for a whole share. And another great feature they have is called dividend reinvestment. So if you own shares of a company that pay dividends, M1 can automatically reinvest the dividends for you and buy more shares of the company without you having to pay any taxes on the dividends. Now, the only con that I see to using M1 Finance is that you do need $500 to start a Roth IRA account. But most other companies require $1,000 or more, so I don't think 500 is that much. I think there might be one company, Betterment, that allows you to start with $100. But I totally recommend saving up 500 and just going with M1 just because of all the other great features they have. So I'm gonna be using the M1 website on my desktop to walk you through the process. But everything that you see me do here, you can actually do it right from the app. It's just gonna be a lot easier to show you everything by doing it on the desktop instead of doing it on the app. So let's log into M1 and I'll show you how to get started creating an IRA. When you create your M1 account, this is what you see. You can actually create multiple portfolios within this. So this is my main portfolio. Now, I just started using M1, but I am planning to build this into a 6-figure portfolio, just like the other portfolios I have with Robinhood and E-Trade. M1 is pretty new to me, but I actually do like using it more than Robinhood for a lot of things. Now, when you first open your account, they're gonna have you create a regular portfolio. So this is basically like having a brokerage account. And when you create your Roth IRA, it's the same thing, except there's a couple restrictions. Your regular brokerage account in M1 requires $100 to start up. The Roth IRA requires $500. So I'm gonna go in here where it says my portfolio name, and I'm just gonna click, and I already created the Roth IRA, but what you wanna do is just click add account, choose retirement, and click continue. Then choose Roth IRA, click continue, and click confirm, and boom, you'll see this screen. Now here you're gonna wanna go to add bank, so you can deposit the $500 minimum. So this one I already added a bank account and I already deposited $500. So let me show you how to build a portfolio in here. So M1 has this concept of creating a pie. So basically each pie has slices, and each slice could be a different stock or a group of stocks. This here you can browse expert pies, see pies created by hedge funds or financial institutions. And under search securities, this is how you can search for stocks and ETFs so you can add them to your pie yourself. So as an example, let's click browse, and here it lists all the companies in the stock exchange, and it's sorted by market cap. You can even sort it by dividend. You can even go under filters and pick the sectors that each of these companies are in and look at the companies in each sector. Under price history, you can see how much it's grown in the last year, 2 years, and this is yearly, 5 years, so 35% per year. And you can even see its PE ratio. Now you can go ahead and click on it and it'll give you more information about the particular company. You can read some news, a profile about it, see bigger charts. It's really not the best platform for market research. You might want to use something like Yahoo Finance, Seeking Alpha, FinViz, or any other things for actually doing research on the company. But then you can either click add to basket here and it'll add it to your basket, and then once you click add, it'll add all the stocks into your particular pie. If we go back, we can select multiple companies at once, and then let's click add, and boom, I basically created a pie. And you can make this pie your portfolio, or you can make this group of companies a slice in your bigger pie. And here you can set what percentage of each company you want to divest your money into, and it has to total 100. So let's say we put 50% for Facebook. Everything else has to total 100. See, right now it's totaling 130, and that's why it's giving us an error. So now it's 100, and we can click save. So what that means is if you add this to your portfolio, every time you contribute any money into your Roth IRA, M1 will go in and automatically buy those companies in the percentage that you listed it to. The beauty of this is you can set up automatic deposits and literally not even have to do anything else. So if you set it up to invest $100 a month, it'll take that $100 and divide it and distribute it and buy all those companies in the percentage that you asked it to. Right, so I call this portfolio tech companies, and it's showing the slices over here. So I just removed all the companies there because I want to show you how to look for other types of companies, other types of securities, and also if you want to just pick an expert's pie, let's say like Warren Buffett's pie or something, because you really respect Warren Buffett, I'll show you how to do that. So I'm actually gonna change this pie name to Roth Portfolio. And let's click add. So here under stocks is where we pick the stocks, but you can actually go to funds and you'll see a bunch of ETF. My favorite one is QQQ. You can add them as well. You can go here and see its price history as well. You can see like this company grew by 7.47% over the last 5 years. And you can sort it by the price history over the last 5 years. Now you can click on my pies to see the pies you've already created. See, this is the tech companies one we made before, and I made a couple other ones that I'll show you in a bit. And under expert pies, they have pies that were already built for you with a bunch of index funds and things inside. And you can even go to hedge fund followers and see your favorite hedge fund manager like Warren Buffett and actually just invest exactly how he's investing if you wanted to. Now, I like to select my own stocks, but maybe this is the right way for you if you just want to set it and forget it. Now, under hedge fund managers, it'll show some of the biggest hedge funds in the world. Like Berkshire Hathaway is the one that Warren Buffett is the CEO of. So if you want to invest exactly like Warren Buffett, you can actually just choose this, click it, add to basket, click add, and then basically you just click save, and you're set up to run your Roth IRA with the exact investments that Warren Buffett made. Now, if you go back and you can read each of these and see what their specific purpose is, so general investing, and here it shows what they think the risk is. And then inside it, you can see more about the pie. Like this one's for investors with a high risk tolerance. Basically just has a bunch of Vanguard ETFs, and it shows what percentage of ETF is dedicated to the pie. Yeah, so this grew 60% over the last 5 years. That's about 12% a year. And the rule of thumb is the younger you are, the more aggressive you can be. You have a lot more time to make sure the market corrects itself. So let's go back to my pies because I had already created one. This one right here that I called Gil's Public Portfolio. So if you see inside it, I've made slices from other pies I've created. So I really am just gonna add this one because this is gonna be my public portfolio, which I want to actually make videos of in the future. And it's also gonna be my Roth IRA portfolio. I'll just add it to the basket and I'll get rid of Berkshire Hathaway. So this is basically 100% of my Roth portfolio. Now click save. So I'm adding this because I'm basically planning to grow a portfolio in M1 and I don't want to have two separate portfolios. The risky stocks that I buy are typically on Robinhood. So this is going to be a more safe approach that I have. I'm not going to get into it right now, but basically I just made slices out of the sectors that I like. Like I have some real estate companies under here and I want my portfolio to generate more dividends. So that's why I'm putting 35% into real estate. I have tech companies over here and it shows the slices inside this slice. But yeah, in the future, I want to make more videos showing this portfolio and breaking down each company in it. But for now, what I'll do is I'll click share this pie and I'll take this link and I'll put it in the description. If you want to go look at the investments I'm making, go feel free to check it out. When your portfolio does make purchases, you can go and check them out in holdings. Here under funding history shows you how much you've contributed so far for your years. So I've only put the deposit of $500 for 2020 and it's telling me that I can still put up another $5,500 if I wanted to. But let's go to deposit and I'll show you how to create a recurring deposit. So basically I'm gonna put in $500 a month. So that'll equal $6,000 a year. You select your bank account and click switch to recurring schedule. So I'm gonna do once a month in the beginning of every month. So here, whatever your budget is, you can just put it in here. If you can afford $100 a month, put $100 a month. You saw the calculations I made in the beginning. So even $100 a month will make you a millionaire if you start right now. So this is set up. So basically, in the beginning of every month, an automatic deposit of $500 is gonna go into M1. M1 will automatically buy the stocks that I chose for my pies in the percentage that I chose for my pies. The reason I like this so much is because right now, those are the stocks that I'm looking at. If in the future I take a look at them and I want to get out of some, I can just go in and edit the pie and M1 will sell some of the stocks automatically and automatically buy more. Like right now, I really like the real estate industry because I think it's undervalued, and the financial industry as well. They also have really high dividends. And for this kind of portfolio, I want high dividends. Why I'm picking those sectors is a topic for a whole other video. But basically, if down the line, I want to go heavy on tech or something like that, all I have to do is edit the pies. So I put a higher percentage into tech. M1 is really cool too because you can just share your portfolio with everybody. So if I want to make more videos on stocks in the future, if people like it, I can just share the portfolio and everybody can see what I'm picking. So I'm still getting familiar with M1. I'll make more videos using this platform in the future. A couple of things that you want to remember in regards to a Roth IRA are you really can only contribute to a Roth IRA if you make $120,000 or less. If you make more than that in a certain year, you'll have to pay a penalty. I think it's about $300 penalty if you invest the maximum of $6,000 into the Roth IRA once you've made more than $120,000. You can withdraw whatever you contributed completely free with no penalties. You only have to pay a penalty if you withdraw the gains. If you're under 18, you have to get your parent to create a custodian account for you, and you won't be able to do it with M1. But once you do turn 18, you can transfer everything over to M1. And lastly, don't make the mistake and hire a financial advisor to create a Roth IRA for you, because their fees are kind of high and you won't have any control over your investments. I guess for some people, they really don't want control over their investments, but the way M1 sets it up, where you can even just get expert pies, if you really don't want to do anything, all you have to do is take 5 minutes to get it set up, and it'll save you hundreds of thousands of dollars in fees. 1% doesn't sound a lot, but if you add it to a compound interest calculator, you'll see that 1% will equal hundreds of thousands of dollars by when you retire. So that's basically it. Leave me any questions you may have at the bottom. If a lot of people have the same questions, maybe I'll have to make another video answering a lot of the questions or walking you through M1 again. I do plan to use this platform in the future to make more videos. So if you like this video, let me know by liking the video. And if you like the kind of content I put out that has to do with entrepreneurship, investing, finance, lifestyle design, feel free to subscribe, and I'll see you soon.